Welcome to the deep dive. We're diving deep today, really deep into Ford Motor Company. You know them, ticker symbol F on the NYSE.
Yeah, the big blue oval.
That's the one. Now we've been poring over this Ford stock deep research guide, trying to get to the heart of it, And we're coming at this from a value investing perspective.
Right, right. So for those folks, we're thinking long term.
Exactly, long term. So what we really want to do today is give you, the listener, a really solid grasp of what Ford's all about. What's their business model? Who are these people running the show? What's their financial picture like?
Yeah, because, you can't make a good investment decision without understanding the nuts and bolts of the company, right?
Absolutely. And in this rapidly changing car industry, there's a lot to unpack with Ford. And stick with us, because at the end, we've got something pretty interesting to share. It might even surprise you. A little nugget we found in our research.
Oh, I think it'll raise some eyebrows for sure.
So let's kick things off. First things first, we need to understand what Ford's actually doing these days.
Right. What's their game plan? Well, their strategy right now is called the Ford Plus plan, and they've divided their whole automotive business into three segments. It's all about focusing on different types of customers.
Okay, three segments. So it's like a three-pronged approach.
Exactly.
You've got, what is it, Ford Blue. That's the classic Ford, right? The gas guzzlers and the hybrids.
You got it. That's their core business, the one they've been doing for over a century. Tried and true, But they're also being smart about the future.
And that's where the other two come in. You have Ford Model E, which is all about EVs, the electric vehicles.
Yeah, and all the software that goes with them. That's where they're really pushing innovation, even if it's, costing them a bit right now.
And then you have Ford Pro, which is focused on commercial vehicles, right? Like fleet vehicles and stuff.
Yeah, businesses, contractors, that sort of thing. Ford Pro not only provides the vehicles, but also all the software and services to manage those fleets.
So it's like they're trying to cover all their bases, offering something for everyone.
Exactly. And this approach makes sense. Ford Blue is their cash cow, allowing them to fund the growth of Model E and Pro. Each segment is kind of targeting a different kind of investor, too.
Oh, interesting. How so?
Well, someone looking for stable returns might be interested in Ford Blue, while those seeking high growth potential might be drawn to Model E.
Makes sense. And let's not forget about Ford Credit.
Oh, right. Ford Credit, that's their financial services arm.
Yeah, they help people finance their Ford purchases, right?
Exactly. And it's not just loans. They offer leases and all sorts of other financial products. It's a big part of their business, a real profit center.
So when we talk about Ford's products, what are we actually looking at? I mean, they've got a pretty wide range, right?
Yeah, they've got a little something for everyone under both the Ford and Lincoln brands.
Okay, give us the rundown.
Well, you've got the classics, like the Mustang. There's even talk of bringing back the Taurus and Capri in some markets, going for that nostalgia play.
Oh, wow, a blast from the past.
Right. Then there's the trucks and SUVs, like the F-Series, Explorer, Bronco, and the electric Mustang Mach-E.
Oh, can't forget about the Mach-E. It's been making waves in the EV world.
It has. And for commercial customers, they have the Transit and E-Transit vans.
So they've got cars, trucks, SUVs, commercial vehicles. They're really covering all their bases.
And that's a good thing. It gives them some diversity. And what's really telling is their focus on electric and commercial vehicles. That's where they're placing their bets for the future.
Let's talk about their size. I mean, how big of a player is Ford in the global car market?
They are a giant. They're the second largest automaker in the U.S., and globally, they were ranked 6th in 2022.
6th in the world. That's impressive.
And in the U.S., they had about 12.6% of the market share in fiscal year 2024. What's even more interesting is that their U.S. retail sales actually grew by 6% in 2024.
6%. That's pretty good, especially when you compare it to the overall industry, which only grew by 2%.
Yeah, they're outperforming the market. And get this, they're dominating the hybrid truck market in the U.S. with a whopping 76% share.
Wow, that's huge. And they're the #2 EV brand in the U.S.
Yep, right behind Tesla. And of course, they have the F-Series, America's best-selling truck for almost half a century.
48 years in a row. It's incredible.
It's a testament to their brand loyalty. I mean, people love their F-Series trucks.
So globally, they operate in over 125 countries.
Yeah, with about 171,000 employees. That's a massive operation. But they have had some struggles in certain international markets, like China.
Right, China's a tough market to crack. So what's Ford's overall mission? What are they trying to achieve with all this?
Well, their value proposition, as they put it, is to help build a better world where every person is free to move and pursue their dreams.
Okay, that's a pretty grand vision.
It is, but it translates into a very practical strategy.
Yeah.
Freedom of choice in how their vehicles are powered. Gas, hybrid, or electric, they want to give you options.
Makes sense. Not everyone is ready to jump into an EV just yet.
Exactly. They're meeting consumers where they are while still guiding them towards electrification.
Smart move.
And they're really focused on innovative, must-have vehicles and connected services.
They want to make cars that are more than just transportation.
Right. They want to offer experiences, technology, and for their Ford Pro customers, it's all about providing tailored vehicles and services that make their businesses run better.
So, in a nutshell, Ford's business is about designing, building, selling, and servicing vehicles globally.
Yeah, through their three main segments: Ford Blue, Ford Model E, Ford Pro, and their financial arm, Ford Credit. Plus, they also make money from parts, accessories, and service contracts.
Okay, we've got a good picture of the business. Now let's talk about the people at the helm, the management team.
Well, the captain of this ship is Jim Farley.
Jim Farley. He took over as CEO in October 2020, right?
Yeah. He's the man behind the Ford Plus plan, the one really driving the push towards EVs and digital tech.
And he's got a ton of experience in the car industry, right?
Tons. He worked at Toyota and Lexus, and he's held a bunch of different positions within Ford over the years.
So he knows this business inside and out.
Absolutely. And one of his main focuses has been cutting costs and making operations more efficient.
Streamlining things.
Exactly. And they've made some notable leadership changes recently.
Oh yeah, fill us in.
Sherry House became CFO in February 2025.
Okay, so a new CFO.
Right. And John Lawler, the previous CFO, transitioned to a vice chair role.
Vice chair, so what does he do?
He's focusing on long-term strategy, partnerships, alliances, big picture stuff.
Interesting.
And Maureen Jaja, who was running Ford Model E as COO, well, he's now the chief strategy officer.
So they've been shuffling things around at the top.
Yeah, it seems like they're putting the pieces in place to really accelerate their EV strategy and improve their financial performance.
So they're serious about this EV thing.
It looks like it. Moving Lawler, their former CFO, to focus on long-term strategy, that could be a good sign.
Why is that?
Well, it shows they're thinking ahead, planning for the future. And putting the former COO of Model E in charge of overall strategy, that just emphasizes how important EVs are to them.
It's like they're saying, this is the future, and we need someone who knows EVs to guide us.
Exactly. And this team seems to have the right mix of skills to, tackle the challenges ahead, especially with connectivity and electrification.
Now, when we're looking at a company to invest in, we always like to see how they've handled crises in the past, how resilient they are. And Ford's had its fair share of challenges over the years.
Oh, yeah, they've been through a lot. But they've also shown that they can bounce back.
Like during the 2008-2010 automotive crisis, they didn't even need a government bailout, which is pretty impressive.
Yeah, a lot of car companies went belly up back then, but Ford pulled through.
And they've weathered other storms too, right?
Oh, yeah, going all the way back to the Great Depression.
I remember reading about the 1932 Hunger March in Detroit, where Ford workers were protesting wage cuts.
That's right. And they've had financial troubles at various points. In the early 1900s, again in the early 2000s. They've been around for over a century. They've seen it all.
They've also had some ethical and product safety issues in the past, right? The Pinto case comes to mind.
Yeah, that was a dark chapter for them. And the Firestone tire recall, that was a big one too.
So while they've shown resilience, those incidents are a reminder that, strong ethical conduct and safety protocols are essential.
Absolutely. It's one thing to be tough, but you also got to do right by your customers and the public.
Exactly.
So yeah, Ford's history shows they can take a punch. But they've also made some mistakes along the way. It's important for investors to keep that in mind.
Okay, let's talk about their communication. How transparent is Ford with its investors?
Well, they have a dedicated investor relations website, shareholder.ford.com, where they put all their financial documents, earnings releases, SEC filings, annual reports, investor presentations, you name it.
So they're not hiding anything.
Doesn't seem like it. They even do regular earnings conference calls and webcasts, and you can easily find contact info for investor inquiries. They also publish sustainability and ESG reports, so they're being transparent about their environmental and social impact.
And what about their ethical standing today? Have they cleaned up their act since those past issues?
Well, the Ethisphere Institute named them one of the world's most ethical companies for several years. The last mention we found was in 2017, so that's a few years back now. They do have a formal code of conduct handbook outlining their expectations for ethical behavior, with an emphasis on risk management, accountability, and honesty.
So they're at least talking the talk.
They are. And they've got corporate social responsibility initiatives, too, addressing things like human rights in their supply chain and promoting sustainability.
So they're trying to do the right thing, but actions always speak louder than words, right?
Absolutely. It's all about walking the walk.
All right, so let's get down to brass tacks. Does this management team seem honest, capable, shareholder-oriented?
Based on their experience and the direction they're taking the company, they seem pretty capable. And the level of transparency in their communication suggests they're at least trying to be honest.
And they do pay dividends, and they've done share buybacks in the past. That's a good sign for shareholders.
Yeah, it shows they're thinking about shareholder value.
Yeah.
But the losses in Ford Model E and their somewhat cautious outlook for 2025, well, that might give some investors pause.
Sure, there are always some question marks. Okay, let's shift gears and talk about the numbers. How does Ford's financial health look?
All right, let's crunch some numbers.
As of March 2025, their market cap is around $38.5 billion. Their price-earnings ratio, or PE ratio, is between 6.5 and 7. Now, that's lower than their historical average and also lower than some of their peers.
Yeah, a lower PE ratio can sometimes mean that a stock is undervalued, but it's not always that simple.
Right. It could also reflect investor concerns about, the challenges of transitioning to EVs or worries about their overall profitability.
Exactly. It's
Yeah.
just one piece of the puzzle.
Now, their revenue has been growing steadily. In 2024, it went up by 5%, 11.47% in 2023, and 15.93% in 2022. That's a good trend.
Yeah, consistent revenue growth is always a positive sign. It means people are buying their products.
Let's talk about profit margins. In 2024, their gross profit margin was 8.4%. Their adjusted operating profit margin was 5.5%, but their net profit margin was only 3.2%.
Those net profit margins are pretty low, especially compared to some other industries.
What is that telling us?
Well, they're bringing in money, but they're not keeping much of it as profit.
Why is that?
Could be a bunch of things. Increased costs from developing EVs, competition driving down prices, maybe some inefficiencies in their operations. It's something they need to work on.
Okay, how about their debt?
As of December 2024, their debt-to-equity ratio was between 2.31 and 3.59.
That sounds kind of high.
It is. It means they're relying more on debt to finance their operations than equity.
Is that a bad thing?
Well, it can be risky. Debt can magnify returns, but it can also magnify losses. And they have to pay interest on that debt, which eats into their profits.
Especially with interest rates rising.
Exactly. It also makes them more vulnerable if the economy takes a downturn.
Okay, but on the positive side, they did generate $6.7 billion in free cash flow in 2024.
Oh, yeah, that's a big plus. Free cash flow is like the lifeblood of a company. They can use that to invest in growth, pay down debt, give back to shareholders, or just weather any storms that come their way.
It's a good sign that they're generating cash.
Definitely. Now, their price-to-book ratio as of March 2025 is below 1. It's sitting between 0.86 and 0.89.
And that means what exactly?
Well, it could mean that the market is valuing Ford's assets at less than what they're actually worth on their books. But, it's important to understand why.
Right, there's always a reason. So to sum up, Ford was profitable in 2024, but they have a lot of debt. Their positive free cash flow is a strength, but those low profit margins and high leverage are definitely concerns.
Yeah, it's a bit of a mixed bag.
We've covered a lot of ground in this first half. We've looked at Ford's business model, their management team, and their financials. When we come back, we'll dive into market sentiment, ownership structure, and the risks and opportunities facing Ford. Stay tuned.
We'll be right back.
Welcome back to the deep dive. We're now going to delve into how the market feels about Ford's stock.
Yeah, let's gauge the temperature, see what investors are thinking.
From what we've gathered, the sentiment is kind of mixed, leaning towards cautious. Analyst ratings are all over the place, from buy to sell.
Yeah, there's no clear consensus, but the overall feeling seems to be hold, like wait and see.
And I think a lot of that uncertainty stems from their recent financial outlook. Their guidance for 2025 was weaker than many analysts were expecting, and that triggered a drop in the stock price.
Yeah, expectations play a big role in how the market reacts.
The average 12-month price target from analysts as of late February, March 2025 was around $10.59, but the range of targets is really wide, from $8 to $17.
Whoa, that's a big spread. It shows how much disagreement there is about Ford's future.
And after that cautious 2025 guidance came out, some analysts lowered their price targets. So if you compare that average target to the trading price in late March, around $9.70, it suggests a small potential upside.
Yeah, but with that wide range of targets, there's a lot of uncertainty.
For sure. Ford did report record revenue for 2024, but their EV division, Ford Model E, is still losing money, and those losses are getting bigger. Plus, their U.S. sales dipped in February 2025, down 9% year over year.
So a bit of a tug-of-war. Strong revenue, but also growing losses in a key area.
Exactly. Investors are trying to figure out if Ford can make this transition to EVs smoothly and profitably.
Yeah, it's a big question mark hanging over them.
Now, we couldn't find much detailed info on short interest or options trading activity, but those could be good indicators of market sentiment if you want to dig deeper.
Yeah, short interest can tell you how many people are betting against the stock, and options activity can give you a sense of how much volatility people are expecting.
All right, let's move on to ownership. Who owns Ford?
Well, the biggest chunk is owned by institutional investors.
Like pension funds, mutual funds, that sort of thing.
Right. They hold about 59.11% of the company.
That's a big chunk.
Yeah. And the top holders include some familiar names: Vanguard, BlackRock, State Street.
Big players.
Yeah. And Vanguard actually increased its holdings in late 2024, which could be a sign of confidence.
Interesting. Now, what about the Ford family? I mean, they founded the company.
They still have a stake, but it's pretty small, only about 2% of the equity. But here's the kicker. They control about 40% of the voting power through a special class of stock.
So they have a lot of say in how the company is run, even though they don't own that much of it.
Exactly. It's a dual-class stock structure, which is something investors should be aware of.
It's good to know who's really calling the shots. All right, let's try to sum all this up with a SWOT analysis. Strengths, weaknesses, opportunities, and threats.
Classic SWOT analysis, good way to get a big picture view.
Okay, strengths first. Ford has a very strong brand. They dominate the U.S. truck market with the F-Series. They have a global reach. Their revenue has been growing. They have positive free cash flow. They're investing in EVs. They pay consistent dividends. And they have a lot of institutional investors backing them.
That's a pretty solid list of strengths.
Now for the weaknesses. Their net profit margins are low. Their debt-to-equity ratio is high. Their earnings have been a bit volatile lately. Ford Model E is losing money. The outlook for 2025 is cautious, and their return on invested capital is lower than some of their competitors.
Yeah, they definitely have some work to do to address those weaknesses.
Opportunities. Well, the EV market is booming, so there's a lot of potential for Ford Model E to grow. Their commercial vehicle business, Ford Pro, also has room to expand.
Right, those are big growth markets.
And the Ford Plus plan is supposed to help them cut costs and improve efficiency. They're also forming technology partnerships and exploring growth in new international markets.
So they're not standing still, they're trying to capitalize on these opportunities.
Yeah. Now for the threats. The competition in the car industry is fierce, especially in the EV space. They're facing pressure from established players and a wave of new EV startups, especially from China.
Yeah, the Chinese EV companies are coming on strong.
And there's a price war going on in the EV market, which is putting pressure on margins. Governments are tightening emission standards and regulations, and there's always the risk of tariffs and trade disputes disrupting the global supply chain. Plus, EV adoption might be slower than expected, and their high debt makes them vulnerable to interest rate hikes.
So they've got a lot of external factors to worry about.
They do. It's a tough business. So to wrap it all up, Ford is a company at a crossroads. The car industry is changing rapidly, and they're trying to adapt.
It's a make-or-break moment for them.
They have some major strengths, but also some serious weaknesses.
Right, it's a balancing act.
Potential investors need to weigh those carefully. Their success hinges on how well they execute their EV transition, how they manage their debt, and whether they can maintain their strength in trucks and commercial vehicles. The dividend is a nice bonus, but it's not enough on its own.
It's not just about the present, it's about the future. Can they adapt and thrive in this new world of electric vehicles?
Exactly. For value investors, Ford might be attractive if you believe in their Ford Plus plan, if you think they can turn around their EV business and get their debt under control. But it's not a slam dunk. You have to monitor them closely.
It's a high-risk, high-reward kind of situation.
And now for that little surprise we teased at the beginning.
The eyebrow raiser.
It's about the Ford family. They only own about 2% of the company's stock.
Right, a tiny slice of the pie.
But they control 40% of the voting power.
That's a lot of power for a small stake.
It means they have a huge influence on the company's direction. So even though Ford is a publicly traded company, the Ford family still has a lot of control.
It's something investors need to factor into their decision-making.
So as you think about everything we've discussed today, here's a final question for you to ponder. Given how much Ford is investing in electric vehicles, how do you weigh the current losses in that segment against the potential for future dominance, especially when you consider the intense competition they're facing from both traditional car makers and new EV companies?
Yeah, it's a tough one. It's all about betting on the future. Do you believe Ford can become a leader in the EV space, or will they get left behind?
It's a gamble, for
Yeah,
sure, and that's what makes investing so interesting.
absolutely. It's all about weighing the risks and the rewards.
Well, we've reached the end of our deep dive into Ford Motor Company.
We covered a lot of ground today.
If you enjoyed this deep dive and you want more in-depth analysis of companies and stocks, make sure to subscribe to the StockAnalytics.ai YouTube channel.
We release new videos all the time, all aimed at helping you become a smarter, more informed investor.
And as always, a quick disclaimer. This deep dive was based on publicly available research and should not be considered financial advice. Any stock suggestions you might see in the comments, those are just the opinions of individual commenters, not recommendations from us. And our research and AI disclaimer applies as required by the channel.
Thanks for joining us on the deep dive.
We'll see you next time.